Tesla stock, that's what we're talking about here today, folks. First off, Tesla revenues coming in at almost $25 billion. They beat by almost $500 million in terms of their revenue line item. Earnings beat quite substantially, came in at 91 cents adjusted versus 82 cents was expected. Net income came in at $2.7 billion. It's an increase of 20%. So as far as those numbers, things kind of look okay. Now, the stock price is not really moving here. We're going to talk about that in this video. There's something pretty substantial going on that I need to show you and we need to talk about here, okay? Even crazier is Netflix stock is actually going down quite substantially after hours. And I want to talk about Tesla first. I want to go through their numbers. Then we're going to talk about Netflix. One of these two stocks I'm actually likely going to be a buyer of tomorrow. I'll tell you what's going on there and why I'm planning on doing that. But nonetheless, folks, there were some really good things in here, some really bad things in here. And I want to go through it all and show you guys exactly what's going on. And also, Elon Musk is still preparing for something. And I want to show you guys some numbers here on what exactly is going on, in my opinion, because it does look like Elon's still preparing for something, okay? And I'll just leave it like that and we'll get into that. So I'll explain that. I appreciate everybody joining me. As always, thanks so much, folks. Thanks for being subscribed here today, okay? So first off, in regards to kind of Tesla's numbers, right? Automotive revenues up 46%. Energy generation and storage revenue is up 74%. Services and other revenue up 47%. Those numbers are great. I mean, you know, it doesn't get much better than that. I can't hope for much better than that. That's phenomenal. Total revenue is up 47% year over year. That's phenomenal. Total gross profit on the other side was only up 7%. You never want to see revenues coming in at 47% up in gross profit, only up 7%. Now, we do know that's because of the price cuts, obviously, of the vehicles, so it doesn't come as shocking information. Total GAAP gross margin was down almost 700 basis points on a year-over-year basis. Income from operations was down 3%. Operating margin was down almost 500 basis points, which just think of 500 basis points as basically 5%, okay? Now, adjusted EBITDA was up 23%. Now, why would I have adjusted EBITDA in red if it's up 23%? Like, that's supposed to be a really good number, right? The reason I have that circled red there is because revenues were up 47%. So if you're going to grow revenues 47%, you don't want to see your adjusted EBITDA only up 23%. Now, once again, that goes into obviously lowering the vehicle prices in the short term to hopefully capitalize long term and you know, hurt competitors and make Tesla into a position of power, right? But obviously, at the end of the day, like, we don't want to see it's not ideal to have a company basically have less than half of the percentage growth in adjusted EBITDA that they might in revenue line item. Adjusted EBITDA margin came in at about down 372 basis points. Net income was up 20%. EPS was up 20% there, right? You know, those are strong numbers if your revenue's up 20% also, but when your revenue's up nearly 50%, 20% is not a good number. Once again, that gets into the vehicle price cuts and all those sorts of things, right? Net cash provided by operating activities was up 30%. That's good. Free cash flow was up a whopping 62%. That's very good. Cash and cash equivalents was up about 22%, okay? Now, something interesting about cash being where it's at is that goes to show you something, okay? That definitely goes to show you something, right? What that tells me is with Elon continuing to kind of pile on the cash, it looks to me like Elon still thinks there's a potential of a recession, right? And we've heard Elon make predictions in the past about recession and, you know, the recession's coming. Now, so far he's been obviously incorrect. Like, he started making recession predictions. It was at the end of 2021, beginning of 2022, he started making recession predictions. Obviously, we haven't seen any sort of giant recession or anything like that yet, right, where massive job losses happen. Doesn't mean it can't still happen, and it seems like he's stacking cash just in case. So that's kind of what I read into the fact that he's just stacking cash right now. Because obviously, if he wanted, he could use that money on share buybacks. You know, Tesla could do a bunch of share buybacks right now. And, you know, because now they're up to $23 billion of cash. I mean, there's a high probability that they're going to be sitting anywhere between $25 billion in cash and potentially up to $30 billion of cash at the end of this year. It's a big number, right? And so what does he do with that money? Maybe it's just around for a rainy day rather than go ahead and do other things with it. Now, it's clear as day, right? And it's become more and more evident over this past few years about where the business's future is going, right? And where it's at. 3 and Y, right? There was 90% growth year over year. S and X, I mean, I have a S Plaid, I have an X, I love those vehicles, but let's just be honest, those vehicles are almost irrelevant now at this point in time compared to the 3 and the Y. All the growth is coming from the 3 and the Y. 460,000 of the almost 480,000 units came from the 3 and the Y. Like, those are the vehicle drivers for this company, no pun intended. Cybertruck will obviously be very, very helpful, okay? Now, this was very interesting. I don't know how many people paid attention to this, but I think it matters in a significant way because it's telling us a lot about the state of the consumer and Tesla's customer base and things like that. So check this out. Total deliveries of which were subject to operating lease accounting was up 137% on a year-over-year basis. That's insane growth, which speaks volumes to maybe the credit conditions right now. Maybe people either they can't outright buy a car right now, or they can't get the financing for it, or maybe they just can't afford the payments, so a lease is better. Like, there's reasons on why that number's up almost 140% year over year, way outstripping the overall growth in deliveries for the company, right? Deliveries are up 83%, but yet lease accounting up 137%, okay? So, yeah, that's what happens when interest rates are way elevated from where they are usually at, and I think that's an important factor there, right? Now, solar deployed was actually down almost 40% year over year. I think it's time we have a discussion, a fair discussion as Tesla investors about the solar business, okay? I think we have to consider exiting that business. As somebody that's been a shareholder of this company for many years, I think I first started buying Tesla stock and it was like 2018, I believe. 2018, 2019 was when I was loading the boat on Tesla shares back in the day, right? And solar's always been there, and it's always been like, this is going to be some big thing. It's never panned out. It's never panned out. I can almost guarantee you we've lost a fortune trying to make that business work. It's never worked, and we keep trying it. It's not there. I honestly think it's probably the best time for us to get out of that business. I just don't think it makes sense on the financial front. It doesn't put the numbers up, and we can keep trying it year after year after year, but it's clear as day it's not working. It's never worked. The business has never worked. And so I think it's a fair time that we have to consider getting out of that business. It takes up resources, it takes up time and attention for something that's just not paying off, to be quite frank. It is not paying off, and it never has paid off. So my personal opinion is we should exit that business, cut it off. There's so many growth opportunities at Tesla, so many current things they're working on, and so many things that are going in the future. To keep spending time, resources, and energy on this solar business, it just doesn't make sense. It does not make sense. And if it don't make dollars, it don't make sense, okay? And that's the bottom line with the solar business. That's my personal opinion. People can have different opinions, whatever. As somebody that's been an investor for this company for 5+ years, it's just been a crap let-down business forever. And I don't see that changing, just to be quite honest, okay? Now, in terms of what's going good, storage deployed is doing very well. 222% growth year over year. Tesla locations, very nice growth, 29%. Mobile service fleet continues to expand, 22%. That's phenomenal. Supercharger stations up 33%, and supercharger connectors up 33%. That's going to have to continue to grow substantially, especially with the network, being utilized more than just for Teslas. I mean, obviously, if Tesla's putting up 83% more units out there, right? It delivers up 83%. At the end of the day, with Tesla putting up the sorts of numbers they're putting up in terms of how many vehicles, you're going to need a lot more superchargers and a lot more connectors. And when you talk about even other companies, other EV makers, being able to utilize that as well, we're going to need to continue to expand that quite dramatically. And, it's a CapEx item, right? Now, there's something very interesting, okay, that happened. Because basically Tesla always shows a bunch of pictures after they kind of go through their numbers. And you can kind of tell where maybe the team's at, the executive team, in terms of where their mindset is moving forward. And I don't know if you guys noticed this in the photos or not, but it's very clear on all attention for the company. All the first photos they showed all around Cybertruck. They didn't show anything else for quite a while. It was just Cybertruck photos after Cybertruck photos of Cybertruck testing, of, this is production line at Gigafactory Texas for the Cybertruck here. This is a Cybertruck production line at Gigafactory Texas RC units. It's clear as day, like where this company's real focus is now at this point in time, it is all on Cybertruck. Everybody is obviously very focused on this, and this is the big thing that's going here. They even took this photo here, the first, Cybertruck coming off the line here, and it's interesting. Everybody had a real nice smile going, look real happy, except for, look at this person right here. Somebody check on her, okay? Somebody check on her. I don't know what's going on there. I noticed that everybody's so smiley and happy. She's either disgruntled or she looks mad. She's just super serious. I don't know, man. She means business. That's all I know. So somebody check on that woman, okay? Now, this obviously should always be seen as kind of the most important metric for Tesla. They're trying to grow deliveries and grow them substantially. And we can see the insane growth for vehicle deliveries over time, right? And we've had a few kind of, taper offs of growth. But ultimately, this has been up and up and up. And that's what Elon's going for, that's what the team's going for, that's what we want, right? Now, on the balance sheet side, we are now, check out the growth on just a year-over-year basis. Total stockholder equity, right, which is basically just taking total assets minus total liabilities. We're now sitting at, we were sitting at about $36 billion in total stockholder equity. Now we're up to over $51 billion of stockholder equity, right? So the balance sheet continues to build stronger and stronger and stronger for this company, along with obviously the income statement building stronger. And so we're just building a very a strong financial fortress around this business model now at this point in time to weather anything that's going on out there, right? Now, the stock price is down, or, well, I shouldn't say down. The stock price is maybe break even. We'll see what happens. It could be a little down tomorrow, could be a little up tomorrow, depends upon many various factors, including what happens on the conference call. So, a lot of people are looking at that and they're like, what? Come on, man, we beat on revenues by almost $500 million. We came through with those extremely strong delivery numbers. We had that EPS that, beat handily what analysts were expecting. But at the end of the day, folks, okay, we stole a lot of gains from the back half of this year. The stock's up 150+% year to date. If you're going to have those sorts of gains in the first half of this year, you're going to pull a lot of what could have been potential gains from the back half of this year. You pulled it a lot into the front half of the year. So it doesn't mean Tesla stock can't do well in the back half of this year. It's very possible that Tesla pushes 300+, if not 350+ in the back half of this year. But it's going to be much tougher sledding now at this point in time. And I think an earnings period like this, in an earnings reaction like we just got, that shows you it's going to be tough sledding. To come in with a very nice revenue beat like that and a really nice EPS beat, very impressive. To come in with those sorts of numbers and also margins beat what analysts were expecting as well. If you X out regulatory credits like everybody on the Wall Street was paying attention to, those also beat as well. So they beat on revenue, they beat on margins, they beat on EPS, and yet we got a stock that can't do anything after hours, right? It's going to be tough sledding. So we can still get gains out of Tesla in the back half of the year. It's just going to be much tougher sledding in the first half of this year. First half of the year was easy, man. That was easy, lemon squeezy, okay? Not so much anymore. Now, what about myself personally with Tesla stock? Am I planning on buying Tesla stock or anything like that, okay? So, I can say this. If I didn't own any Tesla stock, I would likely be a buyer of Tesla stock on these earnings, okay? I think we've got stability in margins. I think things probably improve from here as long as the economy stays decent. I think revenue is looking really, really nice. I think EPS can definitely strengthen in the back half of this year and going into next year especially. So I think there's a lot going for Tesla over the next, obviously many years. So if I wasn't a shareholder, I would probably be a buyer if I needed to build a position. However, with that being said, it's already a pretty substantial position for me. It's almost $500,000. So I'm comfortable with what I have. Do I want to sell Tesla on this news? Absolutely not. I think there still is potential gains in the back half of this year and obviously going into future years. But I just think it's going to be tougher sledding. Now, the bigger thing, the more important thing, I think, is Netflix. Okay. Netflix moving down so substantially after hours is, pretty shocking based upon their numbers. Because I would say, let me do a trivia question for everybody, okay? Here's your trivia question. We'll see how well you know the stock market. What is the most important metric for Netflix stock? What is the most important metric, okay? Give you a moment. Do you know what the most important metric is? If not, you should maybe know it, okay? The most important metric for Netflix stock is subscribers, okay? It's always been the most important metric for Netflix, and it always, well, I don't want to say it always will be, but it will be for a long time going in the future, right? Well, Netflix reported shocking numbers. Netflix added 5.9 million subscribers in the quarter, a sign that its two primary 2023 initiatives, cracking down on password sharing and launching a cheaper $6.99 a month per month advertising tier, are bringing in new subscribers. Netflix added 1.2 million subscribers in the United States and Canada, which is very impressive considering like those are markets that are seen as tapped down. Its largest regional quarterly gain since 2021. Okay, folks. Analyst expectations were just over 2 million. Okay, they almost tripled up what analysts were expected. This, I can tell you, this was one of those earnings that you would usually see Netflix up 15-20% after hours. A triple up of subscriber numbers, like literally you would usually see the stock up 15-20% after hours. Like ridiculous, not down 6%. That's a shocking number, but there's some significant things in here, okay? Revenue was not so strong. They were only up 3% on a year-over-year basis, a little less than 3%. That is, for Netflix, that's horrible. Horrible for Netflix, okay? If you're another company, I guess that's fine. Operating income came in at $1.8 billion versus $1.5 billion in the same period last year. Now, operating margin did increase quite dramatically from 19.8% to 22.3%, so that's good. Net income is in the red because basically they didn't even grow net income. So, you want to see net income growing pretty nicely for a stock like this, right? Diluted EPS was up very slightly for the company overall, right? And when you've got 6 million when you have 6 million new additional subscribers, like you should be making a little more money than that, right? In terms of what's hitting the bottom line. Global streaming paid memberships came at 238 million. That was very nice versus 220 in the same quarter last year. That's year-over-year growth of 8%. Netflix will take that. Net cash provided by operating activities came at 1.4 billion. That's obviously great growth year-over-year, and cash flow was a mess last year. And now they did $1.3 billion of free cash flow. Do remember, Netflix bottomed right around this time last year. I believe it was either June, July. It bottomed out at I think it was somewhere between about $170 and $180 a share. Pretty shocking. That it hit down there, and I was actually a buyer of Netflix for the first time in my life. It was a steal deal. Okay, absolute stealing money at that point in time. Now, Netflix is taking market share from competitors. This is Nielsen's The Gauge, share of U.S. TV screen time, total day, right? So Netflix had about 6% in May of 2021. Now they're at, as of last month, they're up to about 8.2%. So they're definitely showing very nice growth overall in terms of taking market share from competitors and just taking market share from time in general, right? Now, also, as far as their balance sheet goes, balance sheet's looking real good. Their cash, this is at the end of this year, right? $5.1 billion of cash. Now they're up to $7.6 billion of cash. Total stockholder equity is up about a little over $2 billion on a year-over-year basis. It's very nice. Now, also, in regards to Netflix, as far as what analysts had for 2024, they had this company basically sitting at a forward P of about 32 based upon EPS of 14.72. But I can tell you with Netflix's guidance there, right? If we go back to these numbers, the guide, it looks like Netflix is going to shape up much more profitable in the back half of this year and probably going into 2024 than a lot of folks anticipate. So if I had to guess, Netflix is truly trading at probably a forward P of about 25 right now, based upon 2024 numbers. And so if that's the case, that's pretty low actually for Netflix. That's actually a great buying opportunity. Is it as good of a buying opportunity as when the stock was under $200 last year? No. But are you going to get the stock under $200 again? No. Okay, that was like a once in a generation type opportunity there with Netflix, right? Now, this is still a tremendous opportunity. So when I look at Netflix, okay, me personally, I'll actually be likely a buyer of this stock. Don't be surprised if you see me buy it in the public account. Don't be surprised if you see me buy it in the Patreon portfolio. By the way, if you're looking to join the Patreon, check out the pinned comment down there. You can see the moves I'm making every single week. I'll be buying stocks on Friday. You can see what I'm selling and buying in the portfolio every week. It's like $19 to be in there. It's a pretty phenomenal deal. Reed Hastings still leading this company. Not leading this company as in like CEO, but he's still very involved. I can tell you, he's as executive chairman, he's still very involved. He's a major shareholder. He's not maybe in the day-to-day process like a CEO would be, but I can tell you, I guarantee you, he's still very involved in this company. And So anyways, Netflix actually a pretty good opportunity. I think Tesla's a good opportunity. It's just more of an opportunity if you don't already have a position built. And so something like Netflix, I'm looking at, I'm like, I think this is a pretty good one here. So appreciate everybody joining me as always, folks. Thanks so much. Continue to build up your portfolios out there. Continue to take advantage of deals out there. There's a lot of deals out there. Appreciate everybody joining me as always. Much love and have a great day.